Hi YouTube family, my name is Insonia. If you're a returning subscriber, thank you for tuning in. If you're new to this channel, welcome. In this channel, we talk a lot about finances and everything real estate. Please do not forget to subscribe, like, share, and turn on your notification buttons. So every time I upload a new video, you'll be the first to be notified. So in today's video, we will be talking about the pre-qualification process and the pre-approval process, and that is mostly for home buyers, right? If you're planning to buy a home. And I know last week I gave some tips on new home buyers, so this is still mostly for new home buyers if you know nothing about buying a house, the process. So these are just some tips, right? So this is the process you actually have to go through, the pre-qualification and the pre-approval. So when we talk about the pre-qualification, right, we are talking about what it involves, the steps. So you can go to the bank, a lender, or whoever and get this information. So some of the things that will be required for a pre-qualification is you sitting down to assess your financial situation. So in doing that, most people will have to evaluate their financial status. What is their income? What are they making, right? What are they putting as saving? What are they owing? Maybe their credit cards or other debts that they have, right? You have to know how much you can afford to spend and determine your eligibility in your mortgage. So that's something that will be in the pre-qualification process. They will have to equally calculate your debt to income ratio, and that is really taken into consideration. Why? Because you don't want to go get a house and then you're unable to pay for the mortgage. So you will have to sit down and talk with whoever, maybe your lender or the bank is, and have to talk that out before they actually go ahead to do the pre-approval. And then they will have to check on your credit score, right? Most lenders will actually review your credit history and your credit scores to assess your credit worthiness. So keep in mind, the higher your credit score, the better loan terms you're going to get. So this is still all in the pre-qualification process, and they will have to gather some financial documents. This is when they sit down to tell you what kind of documents you need to bring. So they will give you specifics, right? Everybody is different. Everybody's case is never the same. So don't assume. A friend of mine just went through the process. This is what was required. Sit down and ask these people, these lenders, these bankers, what do you need to bring for you to be pre-qualified? And then one thing you need to do your due diligence to research your lenders and mortgage options. You don't just want to go with any lender or any mortgage you just hear out there, right? You want to make sure whoever you choose to go with, they have a best they best fit your options. You consider factors like interest rate, loan terms, down payment requirements, closing costs. Not two banks will be the same. Not two mortgage lenders will be the same, right? So you sit down and do your due diligence. You do the research, and that's your part. That's your own part to do. You don't just want to walk out there and just get to a bank or a mortgage lender and just want to go in without even knowing what they can offer you or even having a clue of what you are looking for, right? So you do the research for who your lender is going to be or your mortgage options. So that's some of the things that actually get you pre-qualified, and then you contact the lender and they will request all this pre-qualification. And this, like I said, is just an initial assessment of your financial situation based on the information you provide. So when you provide all those things, they're going to start evaluating your income, your debt, and your credits, right? And to be able to know what is your buying power, because that is so important in buying a house. What is my buying power? I don't want to go buy a house more than something I can afford. I want to stay on this limit, right? I don't want to go above what I am able to afford. I want to stay on that particular point or that amount that I am able to afford, right? And that is something that happens when you actually have thought about really buying a house, and then you start the pre-qualification process. So bear in mind, your pre-qualification process is not your pre-approval. So it's different, but a pre-approval gives you a better way when you go to start looking for houses. Because guess what? Even if you know your pre-qualifications, right? Even if you have your pre-qualification, you need to have a pre-approval letter. Many people or many sellers will not want to actually let you see their house without knowing how much you can offer. They don't just want you to walk into their premises, look at the house, and then you end up not buying. So you need to know how much you can afford, and that is the pre-approval letter you will actually have. That is the next point we are going to talk about. So it's going to be the point number 2 for today's video. Okay, so it's a pre-approval process. So pre-approval provides you a conditional commitment from a lender, which can make your offer more competitive when you are ready to make an offer on a house, right? And what are some of the things you need they will need for pre-approval? You have to complete a mortgage application, right? You have to fill out this mortgage application with a lender of your choice. Provide the detailed information that is required of you, maybe your income, your employment, your assets, anything that is required by the lender. Like I said, the lender will tell you what they need from you, right? When you're completing that form, I'm sure they'll have so many questions for you, so you have to just fill it to the best of your knowledge, and then submit documentation, whichever one is needed from you. Maybe you are working or you're employed, maybe you're self-employed, so they are going to request different information from different people, right? I don't know if they're going to have the same thing, but if I'm employed, that means I have a W-2. If I'm self-employed, that means I don't have a W-2. So of course they will actually ask you for different things depending on what you're doing, right? If you're self-employed or you're employed by somebody, so you have to submit all those things to the bank. But something I know they'll ask you for is W-2. Of course, they always want to know how much you're making, right? And all that kind of stuff. And the next thing, credit check. Credit is always gonna be, whenever you're going through the process, you're still at the initial process, you haven't bought a house, so you always have a credit check, right? And lenders will have to pull your credit. Most lenders, they'll tell you before they pull your credit, right? And they review your credit history, and this, like I said, helps them assess your credit worthiness and how much they can offer. And bear in mind that the higher credit, like I said earlier, the best and favorable loan terms you're gonna get, right? So if you have a good credit, high credit, where you're expecting to have something better than if my credit was poor, then well, they will be thinking of something else, but you have way more options to choose from than if you have a poor or bad credit. And they have to go through the verification and underwriting process. And this is just verifying information that we provided on the application to see if everything is true. If they need more documents from you, they will require them. If they don't, I mean, it's just basically making sure that everything I said or every document I provided is legit, right? Nobody wants to loan you so much money for maybe 15, 30 years, and they don't know how they're going to get their money back, right? So everybody wants to know that, hey, even if I end up giving this person money, I'll be able to get my money back from somewhere. So with your pre-approval letter, you meet the lender's criteria and you receive this letter. And this is just basically, it states the loan amount you are approved for, right? Your pre-approval, and it's subject to certain conditions, right? It's typically for a particular specific period of time, maybe 60 to 90 days, during which you can use this letter to shop for a house. So whenever you meet an agent a real estate agent and you're actually going into looking for houses, right? They will always ask you this. Most agents will not want to work with you without you having a pre-approval letter, because guess what? It's a waste of time me not knowing how much you're pre-approved for, and then we just want to go out there and see houses. What if I go to show you a house that it's more than your budget, or a house that you not even qualified? It's a waste of time to you and I. It just makes work harder, right? So they will want to know how much. And like I said, some sellers do not want people coming to their houses when they're not sure of how much they qualify for. And with this, it makes your life easier finding a home, because of course, when you go out there to search for homes, you actually search for homes that are within the budget, right? The range in which you're actually granted the pre-approval for. It is equally important to know that this is a conditional commitment, right? And it's not a guarantee for your final loan approval. It just tells you, hey, you can be given up to this certain amount. So once you actually find a home, right, then you actually know how much it is. So let's say you're approved for 250, 350, and you find a home cheaper than that. You will not go for the whole 350 because that was what was said, right? You actually go for how much the house is worth. So if I was pre-approved for 350 and as the house I see is 300, of course I'm only gonna buy the house for 300 even if I have up to 350, right? So that's basically what I'm trying to say. So some people will be like, hey, where can I go to go through this process, pre-qualification and pre-approval? You can go through a bank. Maybe you're banking with a particular bank at that moment. When you decide I want to buy a house, you can go with them. We can just check if they have options that are favorable to you. You can go with credit unions, right? Credit unions equally have these services, including mortgages. So most credit unions have it. If that is not also an option for you, you can do mortgage bank brokers. There are mortgage brokers out there that are willing and ready to borrow money to people that want to buy a home, right? And they're equally online lenders. So you have a variety of choices and options to choose from. And when considering the lender, consider factors like interest rate, long-term customer service reputation, and as any associated fee. Everybody is different, like I said. These things come into play. So it is at your advantage when you actually shop around. You have the choice to shop around for what you want, right? Even if you actually go to a bank and they give you something and that's not what you want, you can shop around. I think there's a period where you can actually shop around to have the best interest rate, the best loan term, and all those things. You can shop around. You don't have to stick to one bank just because they gave you that, right? You can still shop around and make sure that, hey, if I'm choosing this particular bank or this mortgage broker, this is the best option I'm getting out of it. Okay, so the next thing I want to talk about is, why is credit important? Credit check so important. We've talked about this so many times, but why is it important for you to know for your credit? So credit is important. First thing I've said, gives you credit worthiness. The bank will want to know how you can pay their money back whenever you borrow from them. It determines your interest rate and the loan term. So if you have a good credit check, a good credit score, there's high probability you're going to have your interest rate is going to be lower than somebody that doesn't have a good credit score. There's a probability that you have a very good loan term, right? So you want to have all these things into play. Maybe you have low fee, more flexible options, and maybe for a lower credit score, you might have more interest rate and stricter loans requirements, and you don't want to keep paying all these small fees into your mortgage, because guess what? That is what makes it expensive. So if you don't have a good credit, you can always work on it. There are credit repair companies out there. There are many ways you can work on your credit if you really don't want to go through the struggles of having a high interest rate and having so much restrictions onto your mortgage, right? That's a 15 or 30 years. Guess what? You don't want to be paying all those high fees for 15, 30 years. That's a lot of money, right? So you can do yourself a favor and work on your credit. And that credit checks just may help you meet the lenders require, and it equally prevents fraud and identity theft. So whenever they check on these things, they make sure, hey, party A is the actual person looking for this loan, right? You don't want to go get they don't want to get someone else's information to put into your information, because hey, I don't want to pay for someone's mortgage when it's not mine, right? So they have to do their due diligence and make sure every information I provided was correct and that credit history is mine, right? So that is why it is very, very crucial for a pre-approval process. So I touched a little bit about self-employed. So some of the things that will be required for self-employed people during their pre-approval process could be like things like your tax return, your profits and losses statements, bank statements. They'll surely ask you your bank statements, right? Your business financial statements. So those are some of the things that could be asked from you, maybe your licensing or registration, proof of self-employment. Like I said, everybody's case is different. The lenders have specific stuff they will ask from each and every individual. It's not going to be the same for every person. So those are just some of the things that can be asked from you if you're self-employed. And I think that will end our video for today. And thank you so much for your time, and thank you for watching. And please stay safe and healthy out there. Until next time, be blessed. Please do not forget to leave comments below. And if there is anything you want me to talk about in my upcoming videos, please leave comments and I will do more research on those things and we'll talk about them. Thank you and enjoy your day.